Tensions and inflation. Hi, I'm Ahura and going to review the most important events in the week ahead. After a busy week with the central banks meeting in the US, UK and Australia, unemployment data from the most developed economies, in the week ahead with the favored data and events, our focus mostly will return back to the geopolitical tensions and inflation numbers. Number one, Chinese trade balance. The trade balance in China is one of the leading energy market drivers. With the latest lockdown in Shanghai, both exports and imports are expected to fall, with more decline in the imports, which makes the trade balance positive. Also, as of the biggest global factory, more exports means more consumer spending in our economies. Data in the week ahead will lift the Chinese yuan against its crosses. Number two, economic sentiment in Europe. The current situation or the outlook index in the Eurozone and Germany should finally reflect the war effects on their economic activities. Inflation is increasing and conflicts in Ukraine do not seem fleeting. Many investors and analysts are looking for the stagflation risk signs in ZEW report. These data should not be positive for the euro against its crosses. Number three, inflation day. Wednesday ahead is the inflation day with CPI data in China, Germany, and United States. While in China, CPI is still expected to hold under 2%, with 8.3% producer inflation, and it still doesn't seem to be a problem there. In Germany and United States, it's expected to be slightly reduced from recent peaks. After last week's Federal Reserve decision, if we see the lower inflation numbers, it must be positive for the US stock markets and destructive for the US dollar. But if we miss the expectations, then bears would be more aggressive. Number four, UK GDP. UK's 2022 first quarter GDP is not expected to be shiny, with slower growth in February as GDP inched up only 0.1%. After advancing 1.3% in the fourth quarter 2021, the consensus expects GDP growth is down to 1% for this quarter. Industrial and manufacturing production numbers also are expected to fall in the same period. Expected numbers together would not be positive for the UK stock markets. Number five, US producer inflation. Like consumer inflation, producer inflation is also expected to ease after recent peaks. Energy price and average wages both lessen, which means lower production cost. Recently, in March, PPI tested its peak, and now we can see some softer numbers. However, will that continue or not? We have to wait and see. Lower producer inflation will support the stock market's positive sentiment and vice versa. Number six, University of Michigan consumer sentiment. One of the most essential indexes which was moving against the market happenings was the US consumer sentiment. We are waiting to see that after surprising increase in April by almost 6 points to 65.2, May's consumer sentiment can provide more inflation on whether consumers' recent optimism has any legs or not. The critical point in April was that it was declining from the previous months despite the annual growth. Thanks for being with us and hope it is going to be an amazing week for you.